Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today, we're diving into Newfound Gold's annual report. Get ready because we're about to unearth some nuggets of information. Hopefully they found some actual gold though. This report covers the year ending December 31, 2024. It's basically a yearly checkup for the company, where they tell investors how they did, what they're planning, and what could go wrong. First, a word of caution. This report contains forward-looking statements. These are basically guesses about the future, using words like expect, believe, and anti-best predictions. But things could change. It's like saying we plan to find a mountain of gold, but then hitting mostly rocks. These forward-looking statements include talk about their projects, especially the Queensway project, exploration plans, and their expectations about raising more money. They also touch on things like gold prices, potential environmental issues, and government regulations. Basically everything that could affect their business. Now let's get to the risks. The company admits that it might not actually find enough gold to make a profit. Mining exploration is a risky game and there's intense competition. They might not be able to get additional financing when they need it, or the terms might not be good. Gold prices could drop, or they might face problems with licenses, permits, or changes in laws. It is worth pointing out that these are all standard risks for a mining company. The report also mentions that their actual results could be very different from what they're predicting, so don't take everything as gospel. Here's a fun fact. Newfound Gold follows Canadian reporting rules, which are different from US rules. So, if you're used to reading US company reports, things might look a little different here. They use something called NI 43101, which sets standards for how they talk about their mineral projects. The annual information form, the management discussion and analysis, and the audited annual financial statements are all incorporated into this report, meaning they are considered part of the document. It's like adding extra chapters to a book. If you really want to understand the whole story, you'll need to read those too. Next, the company talks about its disclosure controls and procedures. Basically, this is how they make sure the information they're giving out is accurate and timely. At the end of 2024, the CEO and CFO said that these controls were working effectively. So they're confident that they're reporting things correctly. They also have internal control over financial reporting, which is a system to make sure their financial statements are reliable. The management assessed this and said it was effective as of December 31, 2024. In short, they trust the numbers they are reporting. Because they're an emerging growth company, they don't need to have an outside auditor check their internal controls. So we're just taking their word for it. The company says there were no big changes to their internal controls during the year, so things have been pretty stable in terms of how they handle their finances. They weren't required to send any notices to their directors or executive officers related to trading restrictions during the year. The board of directors has someone on the audit committee who's a financial expert. This person, Vijay Mehta, is independent and knows their stuff. It's like having a financial doctor on call. The company has a written code of ethics that everyone has to follow. No one got a get-out-of-jail-free card by waiving the code during the year. KPMG LLT, an accounting firm in Vancouver, was their independent auditor for 2024 and 2023. The audit committee has rules about how they approve payments to the auditors. No fees were approved without going through the proper channels. The company didn't have any tricky off-balance sheet arrangements that could mess with their finances, so what you see is what you get. The board has an audit committee made up of independent and financially literate people. They're like the financial watchdogs of the company. As of December 31, 2000, the Vijay Mehta, currently it includes William Hayden, Paul Hewitt, and Vijay Mehta. Currently it includes William Hayden, Chad Williams, and Vijay Mehta. Newfound Gold stock is listed on the NYSE American, but as a Canadian company, they don't have to follow all the same rules as US companies. There are some differences in things like quorum requirements, the number of independent directors, and shareholder approval for certain actions. The company promises to make people available to answer questions from the Securities and Exchange Commission and to provide information about their securities. Both the CEO and CFO signed certificates saying that the information in the report is accurate and that they're responsible for it. Let's talk about the overall direction of Newfound Gold. The company is clearly focused on exploration and development of the Queensway project. This is both a strength and a weakness. If they strike gold, literally, they'll be in great shape. But if they don't, they're putting all their eggs in one basket. One of the biggest risks is the price of gold. If gold prices drop, their potential profits go down too. They also face regulatory and environmental risks, which are common for mining companies. In conclusion, Newfound Gold is a company with potential, but also with significant risks. They're betting big on finding gold, and their success depends on exploration results, gold prices, and their ability to navigate the regulatory landscape. Thanks for watching. If you found this video helpful, please like, comment, and subscribe for more corporate deep dives. Until next time.